earnings side. It may seem like it because we're done with the fangs, the Super Bowl's over, and it's time to move on, right? But there are hundreds of companies expected to report this week, next week, the week after that. We're getting a lot of the new IPOs reporting here later in the earnings season now, or I guess you can say they were new IPOs, now not so much new, but a lot more companies coming here at the end of the cycle than used to happen. So things are still busy, but what should you be watching? There are hundreds of companies, as I said, reporting this week. So I picked out the 5 most important that you should be paying attention to. They might not be the ones you think you should be watching. So let's dive right in and see. So the first one is one you would have thought you should be watching, and it's Airbnb. ABNB is the ticker. They have a pretty good earnings surprise track record here, especially as they went IPO during the pandemic, as you can see, right at the end of 2020. And it's been a rough ride, especially last year with the shares coming down big. But to start 2023, with travel still being so hot, shares have rallied about 27% year to date, coming a little bit off those highs now. So is this mini rally over? We don't know. It's not a cheap stock here. They do have earnings, so they do have a PE of 38. So is this the place to get in? Is this, is it going to retest those 2022 lows there, or is that done? We don't know. This is what everybody's kind of waiting for on this whole rally to start 2023 in general. But Airbnb, they've been reporting some pretty strong numbers and demand for travel is there. So this is one I'm going to be watching. Then we're going to switch over to one of our old favorites, Shopify, ticker SHOP. It used to have that great earnings surprise track record there until 2021 and then really 2022, where we then started recording those big misses. But last quarter, it got back on track with one of its usual really big beats. And the shares have rallied here in 2023 after getting, pretty much destroyed there in 2022. So not surprising, some bottom feeders coming in. Year to date, shares are up 39%, but they are off 10% even just in the last week. So just like Airbnb, a little bit of weakness there. What did the earnings look like? So they're expected to lose 3 cents a share in 2022. But 2023 looking at least on the positive side, but still only a gain up to 4 cents a share for 2023. So the question is, how much are you willing to pay for these shares? And I'm not talking about just the share price, because with that PE, with 4 cents, it's trading with a PE of 1,169%. So pretty much it has a PE, but it's sky high. So there's a lot going on with Shopify. Valuation is only part of the story, and we will be tuning in to see what they have to say this quarter. Then we're going to take a look at another stock that has really seen a strong rally, but it actually started there in 2022. And this is Crocs, ticker CROX. You love them or hate them, they are still popular with consumers. And they've got a great earnings surprise track record. Just 2 misses in the last 5 years. The first one there was right when the pandemic hit, or I should say the last major one. The other one's about to fall off the chart. As long as we get another beat this quarter, it will fall off. So that's an excellent track record given the pandemic. Over the last 6 months, though, these shares are up 50%. They have pulled back a little bit in the last month, down 5.8%. But still a very wicked rally here for Crocs. PE is still great, though, because it got dirt cheap. It was trading at like 4 or 5 times forward at its lows there in 2022. PE is still cheap at 10.8. So this is also one on the consumer side to watch. Shoes do well in recessions and in slowdowns. Crocs price point is also very attractive if in the slowing economy. So Crocs is one that you definitely should be watching this week. Then we're going to bring back another old-time favorite, Pool Corp, ticker POOL, one of the best performing stocks of the last 30 years. And then certainly during the pandemic with that huge rally into 2021, and then it's come down off those highs pretty dramatically in 2022 in the sell-off. But like some of these other stocks, it started 2023 on a hot note, year to date up 22%. But again, over the last week, down 8.5, as some profit takers have come in to exit this trade. But it's got the great earnings surprise track record with just the three misses over the last 5 years and the last one in 2019. So it did not even miss when the pandemic hit. Very impressive. Now, pools have been very hot during the pandemic, and now the worries were peak earnings, right? Because 2021 was the peak earnings, but it doesn't mean earnings are necessarily bad. The consumer is still doing well. They have jobs. They still want to add that pool to the backyard. And so this is still a hot area. That's probably why we're seeing this rally here to start 2023. Shares a little bit oversold. What is the PE like? It's not dirt cheap like Crocs, but it's more attractive than some of the others I've talked about so far. And it has a forward PE of 22. So 22 times for Pool Corp. Is this the end of the worst from those lows there in 2022? We don't know, but we're about to find out. And then I'm going to wrap it up with one of the restaurant stocks. I know this is a favorite of many of yours, not just to go to and eat at, but for this stock. So it is Shake Shack, ticker SHAK. Many who know me and follow me on Twitter know that this is not one of my favorites on the restaurant side, even though I like going to the restaurant. And why is that? And that's because they are still struggling to show any kind of growth at their older stores. So they've been opening up stores, like the demon over the last couple of years. That's not the problem. The problem is making those stores that they opened 4 or 5 years ago see some kind of growth, and they just really aren't. So what does earnings look like with this one? So they're expected to lose 36 cents in 2022, but 2023, we still have a loss of 7 cents. So they're still not making positive earnings, even though they continue to open up these new stores, but rising costs, inflationary pressures, rising wages, all these things are impacting Shake Shack's bottom line here. And, this one does not have the PE even because of the negative earnings, but the earnings surprise track record is good. It only has that one miss right when the pandemic hit, and otherwise it's able to meet or beat all those quarters. And that's great. It is obviously well off its 2021 highs, and it's kind of gone back, basically to pre-pandemic levels. So what is this stock doing? It too has had the rally to start 2023, up 33%. But over the last week, it started to weaken on this rally, down about 5% over the last week heading into this report. So what will they say is going on with costs, and even looking at that same Shack growth? That's what I look at. It has not been good. It tells you how difficult it really is out there in the restaurant industry. Some of the big winners like a Starbucks or a Chipotle make it look easy on that same store growth, but it really isn't. It's really hard to get that customer to go back again and again and again to those especially older stores. So this is a key one I'm going to be watching in the restaurant side, and this is yet again another important earnings chart this week. So as I said, there's hundreds of stocks reporting this week, and it continues on for the next several weeks. A couple others to watch this week are Twilio, Roku. Those are a couple key ones that I just didn't fit into this video. But as I said, there's a lot of big names that are still to come. So be sure to subscribe. Get us on YouTube. Our YouTube channel is hopping right now with all this earnings news, and our top stock picks of the week are over there as well. Make sure you're getting it. You can find it at Zacks.com/YouTube. but be sure to subscribe over there. And as always, I'm going to be tweeting out a lot of charts this week and next week. So be sure to follow me on Twitter or StockTwits. Either one will work. It's just at my name, at Tracy Reineck. But be sure to get us somewhere, and I'll see you again next time with some more earnings charts.